Coming up in this show, I'm going to bring you my comments on the markets. Arby's going to bring you a sample of Future Speak, a member video, and he's going to look at the Euro US dollar, important correlations with the stock market, and our huge announcement. You're going to see our amazing new app, the Market Condition Monitor. And then I'm going to bring you stock market analysis with my projections about this intermediate correction, which is clearly now in force, and a cycle analysis lesson on how to project this market decline.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market moved to the downside last week as fears of a tighter Fed merged with rising Treasury rates and mostly disappointing earnings. After Monday's day off, Tuesday saw a big downside day as the 10-year yields neared 4%. That was helped to the downside by Home Depot and Walmart, which had warnings after their earnings, and Russia suspended its participation in the nuclear arms treaty. Wednesday saw FOMC minutes, and that left the feeling that we're not near ending the upside march in interest rates. And the market was very volatile, with 4 good-sized moves in both directions and ending up on a mixed day. Thursday, big selling came on the hotter GDP and higher inflation numbers, but it ended with modest gains after 5 days of selling, market really getting hurt during this period, and it got helped by NVIDIA earnings, which are benefiting from the AI craze, and that helped the tech stocks rebound. Friday, here today, more downside as we look at the markets around midday. The market started out weak as it was waiting for the Fed's favorite personal consumption expenditure numbers. That PCE came out up 0.6%, much hotter than expected. Year over year up 5.4%. It was estimated at 5%. The core up 0.6%, up 4.7% year over year, and that was estimated at 4.3%. So those numbers much hotter, and the Fed looks at those more than anything. And of course, I've been saying that the Fed is not going to pivot this year. If anything, what they'll do is get to the level that they'll decide to pause and then stay there for a long period of time, maybe well into 2024. So that made the indexes get weaker when those numbers came out, and interest rates move up again. S&P 500 got down about 70 points, down 1.7%, not much better now. The NASDAQ got down as low as 2.2% to the downside. So the stock market has moved into the projected corrective or declining phase, as we've discussed for the past several months, looking at this exact time frame. I have a lesson for you on that later on how we came to that analysis. We warned about this changing condition last week as indexes began with short-term breakdowns. And this week, as our members saw, the bearish changes occurred in the momentum conditions using our proprietary indicators. And those members that are beta testing our new market condition monitor really get to see how that works. We'll tell you a little bit more about that coming up. Now the market's moving into the riskiest period, and it can bring very hard selling and investor capitulation. Wow, that's bad news. And the next month or so is dangerous. The good news for investors is that this could be a great opportunity, but you have to have an iron gut to withstand the selling that appears to be building and the downside momentum, which is also building as conditions deteriorate. You were warned to lighten up some weeks ago. Is it too late? Well, I'm not sure. It could get, pretty hard to the downside, and not exactly everybody's got their own individual risk tolerance. So, not sure for you. Is it time to buy? Well, I'd keep that powder dry. As I say, the next month or so has got a lot of downside risk. Here we are at midday, and the major indexes losing 3.5 to 4.5%. The Dow and the Russell are the two worst for the week. The bonds 30s are down about a half a point. The 10-year yields are up about 11 basis points. That got them close to our target, which was up around 4%. Amazing how these things are hitting our targets on very good time frames. Gold down $32, and it entered into our target zone on the downside. We do see the next 3 to 4 weeks, along with the stock market weakness, getting it down to 1800 or maybe below, and we think that's a great opportunity. Silver down about 70 cents on the week. Our target, 21, and that has been hit. Dollar up about a little more than 1% on the week as money moves back into the dollar in both a quality bid and also the fact that our rates have been going up. And the fact that Japan is denying the fact that they have to let rates go up, that's helping the dollar also. So the dollar, our target was 106 to a potential of 108, and it's getting close up to that 106 number now, with still time for it to move up. Oil down about $1.50 to 74.60. Now, it's really trying to bottom, and we see solid support between $71 and $73, and it could actually test that level again. If you want to see all of our analysis updated, become an askSlim member. And certainly Arvi does an amazing job with updating 24 different futures contracts every single Wednesday in the Future Speak. So you need to be a level 2, 3, or 4 member. I'll tell you more about that in a second. Make sure you go to our website, look around there. If you're new, get acquainted to us, become a level 1 member, and a special deal on that for just $45 for 3 months. On YouTube, subscribe to the channel, click on notification bell, like the video, give it a thumbs up, and on Twitter, follow us at askSlim. Any questions you do have about the great things that we're going to be showing you here throughout the rest of the show, write to Matt at askSlim.com. Okay, we're going to give you a preview here of Future Speak. Arvi has a sample of the Euro US dollar. And again, Future Speak show looks at analysis of 24 different futures contracts and indexes. That's weekly and daily analysis. He shows you 48 different charts when he does that every Wednesday for member levels 2, 3, and 4. Arvi, show him this very important analysis.
So this is the weekly cycle analysis for the Euro USD. We are clearly in a weekly corrective period with a low that's due 123 to 313, looking for the low to form towards that later part of that cycle timing. On the downside, it's reasonable to get down to this zone around that 104.5 or so area. If we jump over to the daily chart, this was not able to rally really at all. There was a low that was due towards that middle part of February time period. All we got was that 1 day of rally, and then we have now actually broken that low in the context of a mildly negative slim ribbon. Overall, we are looking for a move down to this zone from 105.14 to around 104 quarter or so, and that next low is due towards that middle part of March, in line with what we would look for here on the weekly time frame as well. If this were to get through this old high at 108.03, that would indicate that a late short-term low has formed, but currently some of the evidence here is negative in the short term in the Euro USD.
Great work on that. This is important because as the euro weakens and goes down, it pushes the dollar up. And there's a correlation with the stock market that we have seen. And if the dollar is rising right now, the way it's working, it's a flight to safety. It does it also with interest rates moving up. And so this is a big time period that goes into that mid to late March period, which is the time period we think the euro will be moving lower, the euro versus the US dollar. So that was very important analysis, and thanks for bringing that. All right, stock market analysis coming up, but first, don't scroll forward. This is amazing. This is the new, incredible askSlim Market Condition Monitor, the MCM, an amazing app to help guide you to catch the big impulses in the market, in stocks and indexes and ETFs, and no matter your trading style, because you can adjust it for your own trading style. And very important, avoid being on the wrong side, which reduces your risk of big losses. And for just a limited time, only through March 5th, this is included with level 4 memberships. And you can get a special level 4 membership trial, 3 months for, it's just $101 a month versus $159. So it's $303.75 for 3 months. And that's going to include everything that you see on this page, our multiple time frame charts with our 84 from our 84 different symbols in that list, our proprietary studies, our TOS grid archive with all of the chart grids with our proprietary indicators, tons of support resources that you see here, and full membership access, everything in levels 4, 3, 2, and 1. And you can go to askSlim.com for all of the details that's included in all of those memberships. Special, anything more you need to know on that, write to Matt at askSlim.com. Remember, this includes the new market condition monitor for these level 4 subscribers and existing members that are subscribers up to March 5th. I want you to see, this is a little picture of the market condition monitor, one of the views of it for people that are near-term traders. So this is just amazing. Stay here because Matt is going to give you a great overview of that right now.
All right, let's have some fun and go demo some of the key features of the new market conditions monitor. All right, up on top here, you can see that there are two important views which you can start from. We have our trader view and our timeframes view. The timeframes view essentially gives you the opportunity to look at any time frame that we have pre-established from the 3-minute, 15-minute, 2-hour, daily, weekly, and monthly, and see the current reversal scout and slim ribbon, which are two, as I mentioned earlier, primary and custom momentum indicators that we use reliably to help us understand the momentum of various timeframes as well as the specific symbols. So you can see here we have our symbol list, and the symbol list here is fairly broad right now, which includes our focus list of stocks and ETFs, as well as the index ETFs, which you can see here with the SPY, the Qs, IWM, and DIA. And then we have all the major stocks, and we have additional ETFs included in this list as well. So you can choose any one of the time frames. So if I choose, let's say, 15-minute, you can see that instantaneously you will get a read on the current momentum conditions in terms of our reversal scout and the slim ribbon for all those various markets or securities. And what's really great is it gives you a really good visual depiction of that momentum condition happening at that specific time frame. There's a change log that populates the most recent change into this change log here. So you can see here towards the end of the day, there's a lot of securities and symbols that shifted negative in that 15-minute time frame. So if I clicked on one here, let's look at Goldman Sachs, then it narrows into the single symbol, which is Goldman Sachs, GS here, and you have all of the time frames that populate. And then you can even go one step further, and this is really where we've harnessed the power of our proprietary and state-of-the-art momentum analysis to support your trade planning process. So it's really critical as traders that we are able to answer two fundamental questions when you're doing your trade planning. And number one, that is going to be, what's the time frame that you're looking to trade? You know, what's that trader time frame, that trader style that is most comfortable to you? Are you an intraday trader, a near-term trader? Are you looking at the next 1 to 5 sessions? Are you a short-term trader looking at the next few weeks? Or are you a little bit longer intermediate time frame trader where you're looking at the next several weeks? And so what we've done is we've established some trader types for you to make your trade planning process easier, or if you haven't looked at multiple timeframes before, to provide you with a guide that gives you a more structured approach to that, where again, you want to select what's that time frame that you're looking at in terms of your outlook that matches up to your trading style. And then the second key question is, what is the directional bias that you want to position your trade strategy selections around? So for example here, if I was a near-term trader, what we've done is we've have this pre-established multiple time frame look here at the daily momentum conditions, the 2-hour and the 15-minute. And what we've done is we've created a sum of the evidence between these three time frames, taking into consideration the middle time frame as the primary directional bias. And you can see here it says the momentum condition in the middle period indicates the primary directional bias. And when further alignment in the other time frames appear, the trade setup condition will suggest an overall position bias. So one, again, is what's your trader type in terms of the time frame, your outlook period, and then two, as you look to position your bias in terms of your trading strategies, you want to know your directional bias. And so what we've done is we have combined our momentum analysis and come up with a trade setup condition that suggests what that some of the evidence current overall condition is. You can see here in the near-term outlook for GS right now, based on the momentum analysis that we have, it's slightly bearish. So this is the case that is available for all of our symbols. So I showed you the time frames view. Now let's finish with this trader view, which again is really where we've harnessed the power of our momentum analysis here. And at your fingertips, you have the ability to quickly sort and find and scan for trade setup conditions that meet your needs in terms of a directional bias that you're looking for and a trader type that you're looking for. So right now, this is in the short term time frame trader type, and you can see here that I scan for bullish conditions, and I can sort and find all those that are anywhere from very bullish, which you can see the momentum alignment in the various time frames here for that short term, the 2-hour, the daily, the weekly, are all green, meaning that we have positive condition there, which is going to then generate obviously a very bullish trade setup condition. And so our system, the market conditions monitor, is scanning for those combinations, again, to position you for that next impulse wave, or to let you know that it's not optimal to be bearish or when you have something that has a very bullish or bullish momentum condition. Also, you can scan for neutral conditions. If you are an options trader and are looking for opportunities for some strategies that would help with, say, selling premiums in terms of like iron condors, you have the ability to find symbols that have conflicting momentum conditions, which likely suggest some kind of choppy period. So we do have here, I wanted to give you a sort of a teaser overview of the new market conditions monitor that is incredibly powerful. It is available now as part of our beta testing. We are going to be running a special promotion, which Slim is announcing today.
All right, great work explaining that, Matt, and I hope you get a great idea of what the quality is of this great app. Matt will answer your questions on that. Write to him at matt@askSlim.com, and I think you will be so pleased to be a person that has this incredible application at your fingertips to use along with your own work. Stock market, I'm going to give you the SPY intermediate projections and a cycle analysis lesson. Some important information about our analysis right here. It might help you if you stop this video and just read this or take a little picture of it, but you'll get an idea of the analysis that we do and how it differs from other sites that are out there. All right, stock market, intermediate projections 1 to 3 months with a cycle analysis lesson. So you know that we have been looking for the stock market to go into a correction, which it pretty obviously has. We talked about the SPY moving down from its peak between 30 and 60 points. I think from its peak right now, it's made something like 25 points to the downside, close to that. So it is very much in line with the expectations. Now, we don't exactly have a projection that says it'll go down to a specific number because we look at price and time. And as magnitude builds to the downside in a window of opportunity for sellers, then it can go down very sharply. And I'm going to show you how I build that analysis and what the projections are. So this is really a cycle analysis lesson, a little primer for you, for those people that, we get a lot of emails and comments on social media that says, wow, you really nailed these projections. I wanted you to get an idea of my thought process of how I go through this and how I came to this market that I felt would be declining right in this time frame. So this is the SPY looking at this. Now I'm going to go through several different versions of drawings and annotations on here so you get an idea. So right now what you see on here is just the pandemic bottom here in March 20 and the bull market peak up here in January 22. And what we have on here is the 1334 SMA, simple moving averages, which I like to use on my weekly charts. I think that they're better than anything else you can use. And you also have this line right over here, which is our proprietary momentum indicator, which we use on different charts. I like to use it on the weekly chart because it tends to help guide the cycle analysis rhythms. And I'm going to speak about rhythms and energetic movement as we move through this. So this is your basic candlestick chart with a couple of moving averages on there and our proprietary indicator. And now what I'm going to do is I'm going to go from here and begin to move through the analysis. So right now what I've added on the bottom are called cycle brackets. You can see in here I put these arrows in, and what I'm looking for is a repeating energetic rhythm. Now as the market moves up, as you see in here, it tends to ride the moving averages. As you see, this is the 13-week moving average. And then when it breaks down underneath it, it tends to be some signal that there's some important rhythm going on. And my eye identifies a rhythm in here that's being driven to the upside by the upward momentum, as you can see. So there's what I think is an important little low here and an important little low here and one over here. And then one over here, but you could see the market is kind of changing there. And then one over here. So I put the cycle brackets in here in order to give me some sense. Now I noticed that this cycle right over here really looks to be divided in half, as you can see. And this one over here looks to be kind of divided in half. Here, this one over here, from this low here to here, looks to be, it's a little hard to see that half. And this one has a very clear half, that you can see right there. And here's that little minor cycle there and the half right there. So I'm identifying what I see as energetics in the market rhythms. Now, the important thing as we see this is that the formation of the actual price action gives us important information. So this dominant cycle right over here, as you could see, is a 26 weeks, and the minor cycle, which divides it in half, we'll call it the half minor cycle, is about 13 weeks. So I can see that in here as I look at it. Now I have a very trained eye, and I know what these things mean, but I want to explain that to you as we move forward because I think it's important to this analysis. So this you can see is I added the ideal cycle brackets, these energetics in there of money flow, and these give me the cycle phases. When I say phases, you might say that it's when you look at the how other chartists look at it, that it's the rising phase and distribution and declining and accumulation, those type of things. We identify them as rising phases and peaking phases and declining phases and bottoming phases. And you can see right over here on the minor cycle, rising phase right over here, a peaking phase, a declining phase, and the reversal scout help helped us there, and the bottoming phase and the reversal scout helped us right there. As you can see, all important information. So now let's switch over to the next chart right over here as I move through my analysis. And what I've done now is showed you how the price action actually is showing you the movement in here on these cycles. And to give you the clarity, this is the ideal. Now remember, the ideal cycle would rally about halfway up and then come down about halfway right over there. That's the ideal. But you can see it's forming in a different way, where it's rising through most of the cycle and declining through a small portion, rising and declining, rising and declining, rising, and all of a sudden this started to take a shape like this cycle right over here, more like the ideal. But notice that where this bottom is right over here is lower. That is important. Notice that this bottom over here is lower. That's important. So this is important messaging. So we added in the actual dominant cycle that you see in there, and that gives me more information about market condition. Now you see this dotted line over here. This really isn't projecting anything yet, because all it is showing that it has rolled over in here, and the momentum condition there has not yet really rolled over. So we don't really have a solid signal yet about the market peak using the our proprietary momentum indicator. Now there are shorter term indicators that have given negative signals, which I'm not going to show you now because I'm really looking at this weekly analysis. So let's go to the next one, and now I'm adding in the minor cycles, as you can see, and showing you how the minor cycle was positive here, higher bottom right there, a higher bottom here. That made up the two pieces here, and you can see each of these cycles the same thing. This is an upward trend, as you can see, as each of these minor cycles was higher bottoms and higher peaks. Higher bottom and higher peak, but look, something changed right over here, and that gave us some information. Not only did the reversal scout turn down at an earlier point of the cycle right there, but it then told us some information that the decline was likely to go all the way out towards the bottom of the cycle. You can see these blue vertical lines in here. We've added in those cycle lines so you could see where the actual lows came. The actual lows don't always come right on the ideal lows, as you can see. So the troughs, when they form, the bottoms of each of these cycles occur somewhat in some variance of where the ideal would be, but still we get a ton of information in there. So we've added in these cycle lines and these minor cycles, and you can get a good idea of the picture in there. And here you could see this minor cycle in here was positively formed, as you could see that, and that gave us the expectation that the market peak had not occurred, and then it would likely be rallying up here again and taking out that high, and it actually did so. So that was kind of why we didn't think the market peak had occurred yet when the market turned down right over here in December and then began to move up again right over there. So now let's look at the next one, and now you can see I'm putting in some other information. These are cycle configurations and translations. So a cycle configuration is positive when it says a higher bottoms. You can see, and the translation is positive when it peaks late in the cycle. You can see the late peak in the cycle here, the late peak here, the late peak here, and now it's beginning here to give you some different information. It peaked in the middle of the cycle, and these translations and configurations then turn negative. It told us that this rally would fail. It actually made a head and shoulders top, and you can see how the cycles actually create the head and shoulders top. Look what happened here. It got underneath these lows right over there, and it told us there's a lot of trouble, and that this cycle that shows us a cycle length or period from here to here was likely to continue to move to the downside. And with this short-term cycle, the half minor cycle made a negative configuration. It told us the likelihood would be that this would decline again. You can see the evening star that formed right in here, an evening star that formed right in here, a bearish engulfing right in here. So we use candlesticks also to help us there. Now what we see in here is that this cycle configuration is looking like it's going to be positive. Now it also is telling us, as you could see the translation, look where the peak is, way on the right side over here. So there's not a lot of time for decline. So I'm telling you how my mind is working here, what I'm seeing. If you remember so many times, and I've been criticized for this, Slim, you changed your analysis. Well, I don't change my analysis. We look at the market. We're agnostic. And the markets tell us what the analysis is. This low right over here, which occurred at around 348, well, you could see there's not a lot of time to get down to that low. And when I see these configurations right in here, it says to me that this market decline, which is in a very risky period, and I'll say more about that, may not be able to make it down here because it's going to take a lot of time. Now, you can see the very end of these cycles have a lot of downside, strong capitulation that occur. As you can see here, when you have a negative configuration, and right in here, it sold pretty hard right over there that you can see where it fell some almost 50 points right in here, 40 something points very quickly right here. And these last few weeks where the SPY fell from about 412 way down to about 350, which was about 62 points. So there's time for a hard decline in here, and we can't take 348 off the table, but I want to take this analysis a little further so that you could see what the projections look like in here. So I'm going to go to the next set of annotations right over here, and now what I'm bringing in is this periods of risk, the Fed actions, what you can see, what influenced the market movement. Of course, right in here, after the pandemic low, the Fed and the government brought in extreme stimulus. Extreme valuations. S&P 500 went up to about 200% of GDP right up over here, where past peaks have been 110, 150% of GDP, and that really had a sense that there was going to be a reset coming. And here's where the Fed began to withdraw its stimulus, and the S&P 500 reset of valuations has begun based on this period. These nested troughs, in other words, where the minor and the dominant cycles come down, that's these yellow zones. You may see us put them up on the chart sometimes, and those are periods of risk when those come in there. Now, it is minimal when the momentum and the translation is strong. So in other words, momentum and translation strong, you have minimal declines, and then you get to new highs, as you can see right in here. When the momentum and translations is risk, this should be severe, not several. Then it is severe to the downside, as you see right over here. Negative momentum, negative translation, negative momentum, negative translation. And that gives you a sense that there are hard declines in these periods of risk. And that is why I have talked about this period right here, the period of risk that the market has just moved into. I talked about it starting sometime in late January. That's when these peaks were coming in right around late January. It is now weakening right in here, and we are in this period of risk right now. Now, I don't know how far down this is going to get. So what I have to do is put in the important information regarding the support. Begin your journey of learning one of the best ways to understand and analyze the markets. Go to the askSlim.com website and go to membership options right over here. And you can see when you click on that, it's going to take you right to the membership options. And what I suggest is for people that are brand new, that you subscribe to our 3 months for $45 of our level 1, that's our deal membership, and you will begin that process of learning for really what is a very inexpensive price to be getting daily information from us here. Also, I want to encourage you to go to our workshops tab, and you can see the cycle analysis workshop, and you can learn so much about this style of analysis and have the opportunity to invest in a absolutely fantastic pre-recorded workshop. As you can see, I'm scrolling down, and there's a video right there for free. You can learn a lot about this style of analysis, and if you scroll further, you can see what's in each module as you will be learning the process of cycle analysis and have a way to understand markets far different than you ever did. As a matter of fact, once you learn this, you can never go back. This is our cycle analysis workshop, and I think that will help you learn a lot about the style. that we look at here at askSlim.com. Resistance levels, and now I've put that in here so you can get some sense of where we are. You can see in here that it rallied into the sell zone and collapsed, rallied into the sell zone and collapsed. Here you were getting bullish configurations. Right there it hit the minor support zone and rallied. Here are your minor support zones and dominant support zones right in here, and you can see in here on configuration, I don't know how this is going to turn out. If it turns out a positive configuration, this is the bear market bottom, and you will begin this movement up here, and our target was around 430 in the S&P 500, in the SPY, or it could break down below this 348 level, this major low, and that would be an indication that we have to reevaluate where the upside projections are. Let me just get this in shape for you to see right over here. So you can see what we're looking at right over here are the projections that we've now put in here. Here's your period of risk. Here's your positive period when you get out of here. This is a very important period, and again, a period for potential downside capitulation. It has entered the minor support zone right over here. It may find a little bit of support here. The shorter term patterns are suggesting the market will continue down maybe for a few more days and then try to rally. And then the real strong period of risk is in here. It could stop here at the dominant 38.2 around 391.60. That's possible. It's not likely. You can see this black projection right over here that takes you down to the dominant 50, about 383. That would be, to me, what is the highest probability occurrence. And then if it does capitulate and the bear market continues, then some of these lower projections, 375, 363, and potentially testing the 348, is still possible. You can see I don't have a projection down to 348 because I would call that a very low probability. Therefore, and even looking at the Dow structure and patterns, that is really looking much stronger than the SPY, and telling me that it's very likely that this was an important bear market low over here. But the possibility is still there, though a low possibility, to get down to 348. We are in the period of risk. Let's just have a target here of about 383. That's only about 12 points below the present level, and so that's not very far. 383 to 375 is probably more realistic here in this next month, and that is how this all of this analysis developed that I just gave you. Amazing how that all just fits together as you look here and see. I've got trouble with my mouse. It's bouncing and doing that. As you can see in here, the overall how I built into this analysis, and I think that that's really important. You probably saw a little promo that I put in the middle here, and you can go to our psychoanalysis workshop informational page and get more information about it. But I wanted to build that. And so really, as we look at this, the sum of the evidence of everything that we're looking at really suggests that the market is in a period of risk, and the period of risk, as I said in the beginning of the show, could be very gut-wrenching for investors trying to sit through this decline, and then with an opportunity coming, I think, for a long side position coming up after we get past this period of risk. So I'm hoping this was incredibly informative to you, how I built into that, how we do this. Remember, at askSlim.com, we have 4 analysts right now, all experts in this, and we are agnostic. I showed you that little informational page in there. We just respond to what we see in the markets and look at the sum of the evidence to try to give us the highest probability. We're not always right, but I think we're more right than a lot of other analysts out there, and I hope that this is extremely valuable to you. We can't grow. We can't be successful unless you are. And that's why we share everything that we do and want you to keep learning from all of the information that we share. I want you to remember to become a level 4 member through our special. Write to Matt at askSlim.com. Go to the askSlim.com website. On the top, click the Learn More button, and all of the information is there, including the ability to sign up for level 4. You will be grandfathered in if you do this by the 5th of March and get our market condition monitor. That's what's really so important. And go to askSlim.com if you're brand new and get acquainted. Just sign up for level 1 for $45. On YouTube, subscribe to our channel, click that notification bell, and like the video. Give us a thumbs up. And watch the member videos in the playlists and past shows, and that'll give you more idea about who we are. On Twitter, follow us at askSlim, and write to Matt at askSlim.com for any questions that you may have. I want you to be so incredibly careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city.